Hey everyone, welcome back. Hope you guys are having a great day. Today's Tuesday. Thank you so much for coming in to watch this video. We're going to talk about a couple of things, obviously, today. Miners, as far as what happened with them. Most of them were down today. Some were up towards the end of the day. Bitcoin was down for the majority of the day. Kind of came back up a little bit, but still finished out in the red. We do have some stories to talk about, which is going to be on Core Scientific, right? They reported their fiscal year-end 2023 numbers and Q4 numbers. We'll look at those. Those are still before they got out of Chapter 11 bankruptcy. So those aren't really the numbers we're really looking for. At least me, I'm looking for the Q1 numbers for them after they got out of Chapter 11 bankruptcy to see how they are doing. As you can see here on the clock right there, we got 36 days left until Bitcoin halving. So we are definitely going to be in this kind of turbulent time right now with the miners, everything else all being considered. It's going to be a bumpy ride until then, I think, and maybe even a couple of weeks after that until we see potentially miners starting to kind of ramp back up a little bit, going for their all-time highs as Bitcoin goes up higher and things like that, okay? Also, we'll take a look at the miners as far as how they have done over the last year in hash rate growth and BTC production year over year, basically, okay? So we got a lot to go through here. As always, you guys know the drill here. This is not financial advice, for entertainment only. Please do your own research and invest in the following coins and companies for full disclosure. If you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And then any corrections that I need to make will be posted to Discord, which is through Patreon, YouTube community posts, and Twitter as well. All right, so let's see what's going on here on the markets right now as far as Bitcoin's concerned. Bitcoin, obviously, we had a nice wick here down again today. We did climb back up, which was nice to see. So we went to a low today of 68,603. We had a high today at 73,027. Basically like a 4,500 swing on Bitcoin price today alone. We've seen this before. We've seen it here just a couple of days ago, about a week ago. We saw it on Tuesday also. So it seems like Tuesdays are the days where we kind of retrace a little bit, and then Bitcoin kind of bounces as well. You saw this huge wick that we had down here last Tuesday as well. And then, I mean, you can kind of see here that we're kind of like every 5-6 days we're going up, and then we have a down day, 5-6 days going up, down day. We saw this back here as well. A little correction is good, I think, for the overall health of Bitcoin and the market itself. We can't be going up in a straight line anyway, so this is fine. Not a big deal here. And the miners. As far as the miners are concerned here, they were down pretty much. Well, they started out in the green in the morning a little bit, and then they started going down as Bitcoin was starting to go down as well. And most of them have finished out in the red. The only two that were in the green was Hive up 0.32, Hut 8 0.71, and everybody else was in the green, or in the red, sorry. Down here, MicroStrategy was actually in the green today. It was up 7.35%, surprisingly, with Bitcoin being down. So that one definitely decoupled from Bitcoin and where that's going. Definitely a bullish sign for that one, at least for the time being. Okay. And we'll see how they could do going into the rest of this week here. But let's take a look at the stories that we do have here. The first one we're going to get into is something you guys commented about quite a lot yesterday, at least, was on President Biden proposed 2025 tax, or what do you call this? A budget, 2025 budget proposal for projects and things like that. And in there, he had, again, like he did in 2024, the proposal to basically tax the mining companies on the electricity that they use. And also he's trying to get rid of this wash sale rule. If you don't know what that is, wash sale is basically where you sell one crypto and buy it back again, right, for tax reasons. And you can't do that in regular stocks. You have to wait 30 days before you buy the same stock again. But in crypto, you can do that for now, which I'm okay if they get rid of that. That's not a big deal. The big thing is obviously the mining tax on the miners for electricity use. And I mean, this kind of summarizes it up pretty well here. So U.S. President Joe Biden unveiled his proposal fiscal year 2025 budget proposal, which included a crypto mining excise tax and addressing crypto and wash sale rules. These are similar taxes that to those proposed last year, which ultimately weren't taken up by Congress at all. Right? I expect the same thing to kind of happen this time around. Even if they do take it up, and even if it does pass or something like that, it will be probably stricken down in courts, because I'm sure that the miners are going to fight this, because it would be unjust to single out a single industry that uses a lot of electricity, where you have also companies that are in data centers that use a lot of electricity. You also have the smelters for aluminum and other things that use a lot of electricity as well. And so it would be unfairly singling them out, right? So I don't think that's going to go anywhere anyways, but it's just some FUD that you're obviously hearing in there. Okay, so that's it for that one. Let's take a look at Core Scientific here really quick. So Core Scientific announces fiscal fourth quarter and fiscal full year 2023 results. And they're kind of like we expected. They weren't great. There were some improvements in there, which was nice to see. Some good things here is obviously they developed growth plan for more than 20 exahash of new self-mining hash rate. That's going to be obviously in this year, which is good with them growing here. Some quick little tidbits here. Fourth quarter 2023 compared to fiscal year 2022. Total revenue of 141.9 million, an increase of 20.7 million, so that's good there. Total loss of 195.7 million, an improvement of 239.2 million, so that's good there. Adjusted EBITDA of 57.5 million, an increase of 51.2 million, so that's good there. They're doing some right things here. Okay, going down here. The company has completed all 2024 payments for the new Bitcoin miners ordered for the current year and is accelerating the delivery and deployment of new Bitmain S21 miners. That's good there, right? That's for this year. Not so much for last year, but at least for this year and them growing, it's a good thing. In addition, Core Scientific has improved financial results by rationalizing its hosting client base, instituting proceeds sharing contracts, reducing operating expenses, and optimizing the location of miners in its data centers to increase profitability. Those are all great things that will help them obviously in 2024, which is good. And I think there's one more thing here. Fiscal fourth quarter financial results compared to fiscal fourth quarter last year. Total revenue 141.9 million in the fiscal fourth quarter of 2023, increased by 20.7 million or 17% from 121.3 million for the same period in the prior year. So that's good there. Obviously, Bitcoin price has been going up, right? The prior year in 2022, Bitcoin was actually coming down in price where we were like around 15,000 by the end of things. So nonetheless, this is good. The increase in total revenue was driven primarily by 37.7 million increase in digital assets mining revenue due to new miners being deployed in 2023, and the increase in price of Bitcoin, partially offset by 12.9 million decrease in hosting revenue, due primarily to the termination of contracts for several customers in the portfolio with less profitable hosting rates, which is great, right? Because in 2022, they had customers and hosting that was basically losing their money. So it's good that they got that fixed. And a 4.2 million decrease in equipment sales driven by the company's exit from equipment sales business, which is also good. So those two things are obviously good. Other things are good as well. In the past, they used the sales of equipment sales to then get people into mining, which kind of offset some of the losses that they had there. But they're not doing that. That's a good thing. We're working the contracts that they do have now with customers, which is also a good thing where they're more profitable as well. And you can see that down here. Let's see, it's way down here. Sorry, I got to scroll all the way down here. I saw it, not this one. It's going to be the next one, I believe. Here it is. So hosting revenue. In fourth quarter this year, they were gross profit margins was 23%, which is a lot better than the negative 13% that they had here overall. And then for 2022, it was 22% gross profit margin compared to a 2%, right? Much better there. That's good. So that should give us a little bit of hope at least. And then as far as their self-mining segment, that's 28% here compared to the 3 months in 2022, which was a negative 39%. Obviously, Bitcoin was at a lot lower price at that point. And then for the year end, they were up 25% gross profit compared to 1%, right? So much better numbers there as well. Okay, let's take a look at the numbers that I do have here for Core right now. Core is currently at trading at $3.54. Shares outstanding, roughly 185 million shares. Market cap 654 million as it is right now. Current hash rate of 18.9, future hash rate 21.4 exahash. So still pretty good growth there. They've had nice growth here recently, but looking at the quarterly results here is what we really want to look at. Q4 looks like came in at about 112.17 million, right? And then the current quarter that we're in, which is Q1 of 2024, looks like it's going to be about 153.8 million, which is estimated right now. It all depends where Bitcoin goes still at the end of this month. That'll definitely possibly change, okay? But that's nonetheless, it's tracking the right way. We want that to be going up, so that's good. Last 4 quarters operating costs minus depreciation. We're looking at costs have been going up, but their hash rate has also been increasing. So that's partially why we're seeing that. And then going down here, cost to mine 1 Bitcoin minus depreciation. This number here is estimated. They didn't, I couldn't find the actual depreciation for their self-mining in the report. I'm waiting for possibly their 10K report to come out. They haven't released that yet. At least it's not on SEC's website. Once that comes out, I'll get this updated. But right now, looking like I estimated about 20 million in depreciation. So I took that out because they're actually including that in the cost of mining. Okay. But that's got them down to, that got us at least a 19.59 thousand per Bitcoin right now, which it has been increasing as well. But we're seeing that kind of across the board with all the miners for the most part, as the network network hash rate has been increasing. Okay. Bitcoin mine quarterly has been coming down. Their best quarter was obviously Q1 of 2023. And I probably should update this as well. I forgot to update this one. Forgive me while I do that right now. Just noticed something that I didn't do. So we'll move that over, and that'll be done. So now we can see here, it's kind of coming back up a little bit as their hash rate has been increasing. So that's a good sign there. Okay, debt to equity, lower is better. They're at -2, so they're obviously underwater at that point. Obviously, they were still in bankruptcy at that point, so it's kind of expected. Okay, and then we have here current ratio, higher is better. They're at the end of Q4, they were at 0.19, so that's not good. We want them to be at least above 1. And we'll see the difference, obviously, when they report Q1, where they got out of Chapter 11 bankruptcy. A lot of the debt that they had should have been eliminated or somewhat eliminated at that point. So we'll see how that looks, okay? Total current assets fell here to 97 million from 134 million in Q3. And then total current liabilities actually increased here in Q4, as obviously they were working to get that restructured and everything else during the Chapter 11 bankruptcy proceedings and things like that. Okay. So that's that part of it. Going down here, we'll take a look at some of these metrics up here in a second. But assets, like I talked about, 97 million here from 134. So that's a slight decrease there, obviously. About 37 million decrease on it. Total assets actually increased to 712 million from 705. So that's good there. Total current liabilities also increased to 488 million from 312. So it's definitely a sizable increase there. Total liabilities not subject to compromise was 1.2 million now compared to 1 billion. And then total liabilities was 1.3 billion compared to 1.1 billion here. So definitely a sizable increase there as well. Total total liabilities contingent remediable preferred stock and stockholders deficit. That came in at 712 million. That's up a little bit from the 705 million that they had here. Okay, that's all part of the bankruptcy proceedings and things like that. That's going to change, obviously, in Q1. And then revenues here. Revenues, let's see here. What that come in at? That doesn't seem to be right here. I think I'm missing something here. Probably I'm missing something here. 10.062 million. That might be it. Let's see. So did they not make anything? That doesn't seem right. Oh, let's take a look here. Let me double check your hosting. I just noticed that. So revenue, hosting, let's see your assets down here. Where is it at? Revenue. Hosting for 2023, 10.062 million. Interesting. For the 3 months, hosting revenue from related parties. Okay. That's what we're looking at here. From related parties, sorry. So hosting is up here, 102 million. That was 29 million. So that is an increase from the prior quarter. They're done with related party hosting there. Digital self-mining basically came in at 390 million. That's up to 112 million here, which is actually pretty close to what I had for them. I had them, if we scroll back up here, sorry, I had them at 112.3 million. They came in at 112 million.1. That was off by 0.13%. Really good. So I'm happy with that right there. Okay. Continuing on here. Let's see your profit margin for this was profit margin mining, profit margin hosting overall. Okay, so self-mining was at 29% based on the information that we have here. Hosting was at 22% for the quarter. Okay. Going down here, cost of hosting was 23 million and they generated 29 million. So there's definitely some profit margin there. And then the cost of digital asset mining was, for the self-mining, was 79 million. They generated 112 million. So that's how we got the profit margins here on that one. Gross profit came in at 39 million, it looks like, based on what they generated. What their cost was, 39. And then you take a look at the other expenses that they had here. Going down here, let's see here. What do we have here? That's kind of interesting. The changing fair value of derivative instruments. That was a new one that was added in here. Research and development. Why are they still doing research and development? I can't figure that out. They're spending 1.8 million on that per quarter. That means come down from the 2.2 that they had in Q3, but it's still higher than it was in Q2 or Q1. And I don't know what they're researching and developing. At least I haven't figured that out yet. It might be in their 10K report when they do prorate that, but we'll take a look at what they're doing there. Sales and marketing. Why are they still doing sales and marketing? The only sales they should be doing is trying to get maybe customers for their hosting side of things. But why spend that much money on sales and marketing? I think a lot of people that are looking for hosting will be reaching them anyways because they know they're one of the biggest guys out there for hosting as well. So that's kind of, I'd like to see that come down or get rid of completely for sales and marketing. It shouldn't be marketing much right now. General administrative, obviously slight increase to 24.2 million from 23 million. So it's pretty in line with where they've been over the last couple quarters. We'd like to see that come down as well. Let's see here. Operating loss income came in at actually positive 3.9 million, and then total operating expenses came in at 29.99 million. Okay, so that's not too bad. That's actually pretty good, considering that they are actually positive in the quarter on this part. And then you have here interest expenses, right? They paid 83 million in interest expenses here, which is huge compared to what they paid here in the prior quarters, which was barely anything. So I think this was part of their restructuring plan that they had to do that. Reorganization items, 112 million as well. So that's, excuse me. So that definitely took a hit there for them. And then total non-operating income expense net was negative 195 million. And that's how we came up with basically negative 51 cents per basic and diluted shares for the quarter. For the year, came in at 65 cents negative as well. And I'm waiting to see what their actual numbers that they reported in 10K for their shares outstanding right now. So that's one thing that I'm waiting on that once they do report that. Also, the numbers that they provided are unaudited yet, so we're still waiting for the audited version of those numbers, and we'll go through those then. But you can see here that for the quarter, general administrative came in at 24.2 million. That's basically 17% of their overall revenue here, so that's not too bad. We'd like to see them below 20. They are. If they can get below 15, that'd be even better. And I think they can possibly get there as, well, possibly they install more miners, Bitcoin price goes up in value, things like that. They should be getting lower on that side of things as well. Let's see, we talked about already debt to equity current ratio, book to value ratio is negative. Price to book ratio is negative as well for the fourth quarter. Enterprise 656, EBITDA negative 111 million, and then EV to EBITDA is negative 5.8 on that one. Okay, and here's the number for depreciation. It's estimated. Estimated based on what they were reporting here in Q1, Q2, and Q3. I couldn't find it in the numbers for what they reported just now, so I'm guessing in 10K that those should be in there. But basically came into cost to mine at 19.58. Without that, they were at 26,000. So that's been updated here for the last couple of quarters. I just figured out that they were including depreciation in their cost to mine as well. But that is basically it that we're seeing here. Overall, kind of what we expected, I think. What we're really looking forward to is obviously seeing how they are doing after the bankruptcy. So Q1 numbers, right? I think they got a Chapter 11 bankruptcy in January sometime. So once they report Q1 numbers, we should see how those numbers look at that point. And then we can kind of see how are they doing cash flow wise, things like that going forward, right? So we'll see what happens. But right now it's what we have, okay? And I did update some of the spreadsheets that I have with their numbers for that we use for operation side of things. And those might be a little tricky, so I'll point that out to you guys as well while I'm thinking about it. So if we look at miners mining analysis here, if you look at core also provided there at on average about 0.044 cents. This is from the latest presentation from the Q4 FY 2023 numbers. So that got updated. And then down here, I also updated their monthly operations average price, what that comes out to be. And I'm using the interest expense, right? But the interest expense in there was just huge. It was at 83 million right there, right? Which is the highest that they've ever had. So I may take that out because I don't think that's going to be going forward, right? So if I take that out, it's obviously going to be help them to be possibly more profitable than what they is showing right now, at least. Okay, so if I take that out, and you can see this, how big of a change it is. Well, right now they're basically negative 14 million. If Bitcoin's at 72,000, and we get the halving right now with a network hash rate at 570 exahash. But if we take out that possibly one-time net or interest expense on there, you'll see how things look a little bit different for them. Then, right now they're positive actually on the estimated net monthly income based on what we're seeing here. So I may take that out because that is obviously very, very high for the quarter. But let me know what you guys think. If I should keep it in there, I'll keep it in there. If not, but let me know in the comments down below. Okay. But that's basically it on that as far as things getting updated. And then let's take a look at the network hash rate, or not the network hash rate, the hash rate of the miners actually. How they've done over the last year comparing to each other, well, to each other and to themselves, really. And what we're looking at is percentage gains in hash rate, just hash rate increase itself. And we'll get through this. And I gotta blow my nose, sorry. So I'm gonna mute myself for a quick second. Okay, hopefully we're good for a while. So 12-month percentage hash rate growth. You can see here that Iris Energy has had the most growth here really in the last 12 months. They're up 293% from where they started. And this is going just back to, 12 months ago, right? Some of these miners were at a much lower hash rate at that point. They were still growing and doing their thing. So Iris is number one here, followed by probably TeraWolf up 203% in hash rate growth from where they were. Then you would have Hut 8, 187. Hut 8, however, did merge with USBTC. That's the main reason for their growth there. But then you got Mawson, 179%, followed by possibly Sphere, 177%. Right, Sphere was at 100 petahash, and then they grew quite quickly through the rest of the year to 1.2 exahash. So that's why you're seeing that growth there. And then you got, who else here? CleanSpark, 142%, and then BitDigital up 110% as well. BitDeer, so forth, and you can see the list through there. And on the 12-month hash rate difference, what is the actual hash rate? Right, percentage can be kind of easy to, I wouldn't say adjust, but it's easy to gain it possibly, right? If you're at 100 petahash and you install 900 petahash, you're going to have huge increases compared to somebody that's installed 7x, 8, 10 exahash or something like that. So it's good to look at this percentage-wise, but also look at the actual hash rate difference here. So the winner for the last 12 months has been obviously Marathon, increasing by 16 exahash, followed by CleanSpark, 9.4 exahash in growth in a year. TeraWolf up 5.3. Then you got Iris 5.2, followed by Hut 8, which, like I said, was basically because of them merging with USBTC. And then following that would be BitDeer, Riot at 2.6 exahash roughly, and everybody else below that. Lifetime hash rate growth. So now we're looking as far as back as I've been tracking this. So we're going back to basically 2022, I believe. At that point, we can now see that Sphere up 1,100% up, followed by Iris 769%. Then you would have probably CleanSpark up 677% from there. Marathon up 639%. TeraWolf 526, and then BitDigital up 497%. So that's kind of the big ones there. Some of the ones that had some of the smaller growth was obviously like Mawson 36, Stronghold 56%, Hive 45%, BitDeer and 86% growth from what we're tracking them at least. Okay, and then 12-month average BTC per exahash efficiency. So we're looking at the average efficiency on the miners here over the last 12 months. Hive came in at number one with 73.23 BTC per exahash efficiency over the last 12 months, which is really good. Definitely beating by a couple points here, it looks like. The next best one would probably be Cypher with 69.87. And then we got, who do we have next? Probably DigiHost with 69.22. Then Bitfarms at 69.96, I believe, or 67.96. Followed by Iris at 67.72. Then we would have, what do we have here? BitDigital 66.22. And then CleanSpark 66.18. So that's kind of how things are shaping up right now, right? And let's see if we have anything else here. Oh, year-over-year BTC mine difference. So did they actually increase their production from a year ago? On this one, you can see Argo was down actually 70 Bitcoin from last year. BitDigital is actually up 21, so that's good. BitDeer's up 103. Bitfarms is down 87. Cypher is down 64 from last year. CleanSpark is actually up 72. Core is down quite a bit here, 469 down. DigiHost is up just barely 2 from last year. DMG is down 40. Hive is down 50. Hut 8 is up 136. That's because they merged with USBTC. Iris is up 154. So Iris, actually TeraWolf is going to be the best one. But Iris is up 154. Mara up 41 from last year. Mawson up, or actually down 43. Riot down 257. Sphere down 35. And then we got Stronghold up 170 and TeraWolf as well. Okay. So that is it. Just a quick look at how things have progressed over the last year for the miners as far as hash rate, Bitcoin production, all those things. Good things to take a look at. Obviously, keep an eye on as well to see how they're growing throughout the year or the past year. right? Past performance is not indicative of future results, but it does kind of show which ones have been growing in 2023, basically into 2024, which is always good to see. And then you can always see how far they're going to be growing ahead of that. Okay, but that is it for today. Let me know what you guys thought of all this. Obviously, the spreadsheets are available to all my patrons. So this is my only sales pitch for you guys. That's still $8 a month there. And then you might be able to get a spot at $4 or $5. If you pay for the full year, you get a 10% discount there. And you get access to the private Discord server as well, which we have a lot of great conversations there. But that is it. That's my sales pitch. We'll call it a day. I feel like I'm coming down with something. Like I'm starting to get a runny nose. My throat's starting to feel a little weird. So we'll see how things progress. Hopefully it's nothing major and I can continue doing what I'm doing here without much interruption. But we'll see what happens tomorrow. Obviously, we'll take a look at some other metrics if we don't have any news. And if we don't have any news and we don't have really other metrics, we'll maybe call it a day off. But we'll see. Okay. Now, big thing to remember, we are, like I said before, 36 days away from the halving event. We're still kind of early on this stuff. We're going to be in a bumpy ride. Just prepare for that. I bought yesterday. I didn't buy today. Probably should have bought today. But we'll see what happens tomorrow or later on this week. If we dip some more, I'll probably buy some more at that point. As you guys know, I'm a long-term investor in these things. So this is par for the course, I guess you could say, par for the game. We will have these huge run-ups. We will have dips. And eventually, once we get past the halving event, things should improve. That's it. I'm starting to ramble on here. So I hope you guys have a great night. I'll see you guys next one.